Yes, sir. It's your boy B Hayes back with another one, guys. So the best three strategies to use to make thousands of dollars in the stock market. So for one, before we even get into it, what is a strategy? Some people may be like, man, what is a strategy? What is he even talking about? A strategy is one of the components that an investor or day trader look at before they even decide if they want to buy and sell a stock or not, guys, or an asset. It could be crypto as well. So, anyways, a strategy would be one of the tools that you use to give you an indication on if you want to, how you going to play that play. So a strategy, the first strategy would be dip buy. That'll make you lots of money. A dip buy is whenever a stock is trading, say Apple is trading at $130 a share, right? And Apple dropped from 130. This not likely because it's a large cap stable company, but I'm just using it as an example so you can follow me. Everybody know what Apple is, and everybody can pretty much imagine in their head what I'm saying. So Apple dropped from $130 all the way down to $100, just like that. That's a perfect dip buy because Apple is a stable company. Apple, large cap. It barely is volatile. It rarely ever volatile enough to make a move like that unless we're in a market like the market we in now. The crazy market we in now, rare blue moon markets, something like that could possibly happen, but it's still very unlikely. So say if it dropped from 130 to 100, that's a crazy dip buy, and they do it within minutes. You definitely want to buy that. That's a dip buy. If the stock just dipped, and you're going to buy it, and whenever you buy it, you want to look back in the past, look on the chart, see where this stock came down to, see where, whenever it dips, go ahead and be looking, see where that next form of support is at. Wherever the chart show you that support is at, where the stock coming down to, that's where you want to buy near support. As soon as you get in that support, you need to have your plan before you even got in to where you getting out at as well. You need to get out before resistance. As you look back on the chart and it hit support, you can also see where, when it bounce up, where resistance is going to be. And once you see that point, don't wait for it to hit resistance. Sell before it get to resistance. So if Apple dropped from 130 to 100, and then it show you resistance is at 120, that means instead of selling at 120, you want to sell before 120 to make sure you get out with ease. So that means you would sell at 115, 116, way before 120, right? So that's a dip buy. Your next strategy will be a breakout. A breakout is opposite of a dip buy. Instead of the stock dipping, the stock is ripping. So imagine Apple go from $130 down to $120, up to 130, down to 120, up to 130, down to 120, up to 130, down to 120. I need you to follow me. It did this multiple times, right? And then all of a sudden, it decides to break 130 and go up to 133. That's a breakout. Apple is breaking out. So that means you will want to buy at that resistance. It's at 133. You ain't going to buy at 133. I'm going to wait for it to pull back and build support at 130. 130 is that resistance, the top. That's where you want to buy it once it come down to near 130. And then if it break 130 and start to head back down, you will know to get out because it's reversing. It's not a real breakout. It was a fake out. So you want to buy near resistance and buy at 130 and, sell during the rip as it run towards 140. So that would be a dip buy, a breakout, and your next strategy would be a first green day. So some may say, what is a first green day, Hayes? So a first green day, guys, is whenever a stock is just sitting on your watch list and it's consolidating for a long period of time. I'm talking about it's just consolidating. And consolidation is when a stock stays in a tight frame, a tight level. That means, say if Apple, or not even Apple, a penny stock, or Apple, say Apple, it's trading at $130, $131, $130, $131, $130, $131. You see how it's just a dollar. That's it. Just $1 back and forth, back and forth. That's a tight consolidation. And once it come out of consolidation, guys, it's either going to take a big rip up or a big rip down. And if it takes a big rip up after consolidation, that's going to be a first green day, especially if the rip is significant. If it's a penny stock and they go from $1 to $3, $1 to $2, that's a first green day. So whenever it make a move like that, usually 9 times out of 10, that next day will be a green day as well. So whenever it go from $1 to $3, I'm gonna wait for it to come back down. If hopefully it come back down that same day, or if it come down that next day early in the morning, I'm going to get in on the dip and I'm going to ride it back up. Not ride the whole thing, but I'm going to, get the meat of the move in the middle. If it went to 3 from 1, it come back down to 150, I'm going to ride it back to 250. and sell before it get to 3. You feel me? So that's a dip buy, breakout, and a first screen day, guys. That's 3 strategies. And now you're on your way to making thousands of dollars in a day in the market. Of course, it's going to come with a whole lot more knowledge, a whole lot more experience, a whole lot more practicing, but you is now getting closer and closer, guys, to your goal. Keep studying, keep doing research, keep finding out what works, keep finding your true definition of yourself. Don't follow anyone, get, a little information, like peekaboo, peek at what people doing, but don't necessarily indulge too much in that, guys. I love y'all. You already know me. Keep it real with you. Edgeboy on Instagram at the B Hayes Show. Also getting VIP. We're alerting daily. Also hit your boy up on Instagram if you want phone calls. We do 15-minute phone calls and 30-minute phone calls. I love y'all. We out, and God bless you. We go.